Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. And it's Thursday, January 26th, 2023. And how was your Thursday? Are you ready for the weekend? There's lots of scumbaggery happening today, so let's dive in. The creator of the NFT project Moonbirds, Kevin Rose, had at least $1 million worth of NFTs stolen from him in a wallet hack. The website The Block found the hacker's address, and it seems they took around 40 of Rose's NFTs. A Twitter user spotted the hack happening, and Rose confirmed it on his own Twitter account. Now, an examination of his OpenSea transaction history shows that several NFTs were stolen, including Cool Cats, Squiggles, and On-Chain Monkeys. However, it appears that Rose put his most valuable NFTs in a separate vault, one of which was a zombie CryptoPunk, CryptoPunk number 5066, of which there are only 87 other NFTs. In fact, Rose saved a few NFTs by putting them in a separate vault. He and Proof Collective, the NFT community he started, have not responded to requests to explain how the hack occurred or if members of the community were affected. Some people think that Rose's wallet was hacked by using a malicious Seaport bundle, which is a way to trade many assets for one item of equal value. Rose was an early investor in Facebook. On January 6th, he signed with United Talent Agency, which is a well-known talent representation company. Moonbirds is one of the few NFT projects that is publicly available. And on the topic of crypto crime, we've got some news on the Mango Labs heist. Now, Mango Labs filed a lawsuit against Abraham Eisenberg. This lawsuit was filed in New York and says that Eisenberg made a lot of money by using their platform in an illegal way. Basic market manipulation, where he bought up a bunch of a low token, waited until the price went up, took a loan out on the new value of the crypto. Then he intentionally defaults on the loan. Now, Mango Markets, the victim here, they end up with nearly worthless collateral. He thought he was being clever, but instead he was breaking the law. Now, this lawsuit is asking for $47 million. It also wants the court to set aside an agreement between Eisenberg and the DAO that supports Mango Labs. They want the court to declare it invalid and unenforceable. The agreement was about a proposal from Eisenberg. He suggested that he should be able to keep $47 million and Mango Labs won't press charges for taking the money. And by the way, $47 million is way above the usual 5 to 15% finder's fee. In this new lawsuit, Mango Labs says that it was not a legally binding agreement because it was made under duress. Now, they're saying that he made Mango Labs agree to it by making them feel like they had to. They also say that the agreement is not legal and that the depositors should be able to press charges and investigate. On December 27th, Abraham Eisenberg was arrested in Puerto Rico by the FBI. He was charged with committing fraud and manipulating the market by taking money from the platform. On January 9th, the Commodity Futures Trading Commission also charged Eisenberg with manipulating the market. On January 20th, the Securities and Exchange Commission charged Eisenberg with fraud and market manipulation. In the lawsuit, Mango Labs claims that Eisenberg is well known for attacking other cryptocurrency platforms and manipulating the market. Case in point, we've got Aave. Because according to information released today, Aave bought 2.7 million Curve tokens to clear their excessive bad debt. This move was approved of by the community for an improvement protocol that allows the purchase of the tokens. Now, Mark Zeller is the integrations head at Aave, and he said the firm would buy 2.7 million in Curve to clear, quote, excessive remaining bad debt. Now, this is bad debt that was caused by an exploit in November by our friend Abraham Eisenberg, who then attempted to force the developers to buy back his positions at a high cost due to the lack of liquidity. However, Aave had more liquidity than expected, and Eisenberg ended up losing $10 million on the stunt. However, some slippage did occur, and that left Aave with 2.656 million Curve in bad debt. And yet more crypto crime here, because the FBI, along with international law enforcement groups, They've taken down a group that used a type of malware called Hive to steal money. They've helped over 1,300 victims since July and stopped $130 million in ransom payments. They gave the example of a Louisiana hospital that was saved from paying $3 million in ransom. The operation involved seizing servers and working with groups from Germany, the Netherlands, and Europol. The FBI had undercover agents working with the group since July of 2022. They were able to secretly access the group's control panels and helped victims get their assets and devices back without the group knowing about it. And this group was behind a bunch of scumbaggery, to be honest. They were behind a cyber attack on a public health service and a social security fund in Costa Rica back in 2022. They locked important computer systems and asked for $5 million in Bitcoin to unlock them. Now, many people were not able to go to their medical appointments because of this attack. Even though the FBI stopped the group, Director Ray said that only about 20% of people affected by the attack told the FBI about it. He urged people to tell the FBI if they've been attacked because the FBI can help them. The International Swaps and Derivatives Association, or ISDA, published a paper in which they said new digital asset standards could help prevent legal issues like those experienced by FTX. ISDA has 1,000 members, including big banks like JP Morgan Chase and HSBC. They provided new standards and guidance for handling crypto bankruptcies. The CEO of ISDA, Scott O'Malia, said that recent failures in the crypto market highlight the importance of having a clear and consistent framework for rights and obligations in the case of default. He added that new definitions would assist in bankruptcy cases. Now, ISDA also plans to prevent creditors from being left in the dark by long bankruptcy cases. In the crypto industry, some believe that ownership is determined by passwords, but judges may need more convincing. Because sometimes code is law, and sometimes it ain't. Because sometimes the law is the law, and the code can go hang. The ISDA document said that the collapse of FTX shows that ownership norms in the crypto market are still developing or do not yet exist. It also said that when market participants don't understand these issues or don't manage risks properly, significant loss of capital can occur. The document also explains how assets and liabilities can be balanced and how collateral can be enforced in case of bankruptcies. ISDA also announced that another paper will be released in the next few months, which will look at crypto assets stored with intermediaries. Speaking of FTX, U.S. authorities may have found another part of Sam Bankman-Fried's cryptocurrency business. Prosecutors claim that he used money from the FTX exchange to invest in the venture capital firm Modulo Capital. Now, previously, his hedge fund, Alameda Research, which is a sister company of FTX, invested $400 million in Modulo back in 2022, which represents a significant investment, even for Sam. Regulators are paying attention to this funding because Modulo was a relatively unknown company at the time, yet they raised a lot of capital during a difficult time for the crypto market. Investigators have found that the investment in Modulo may have been made using illegal money or money that was taken from customers who deposited it with FTX. The prosecutors said that Modulo is a significant part of the investigation. FTX's lawyers are now looking at Modulo's assets as they try to get back billions of dollars for their customers, investors, and other creditors. The location of SBF's $400 million investment is unknown. Modulo Capital was created in March of 2022 by 3 former executives from Jane Street. Now, Jane Street is a company that employed Bankman Fried and Alameda CEO Caroline Ellison. One of the founders, Duncan Reingens Yu, was just 2 years out of college. Another co-founder, Xiaoyang Zhang, also known as Lily, was a former Wall Street trader with connections to SBF. Modulo also operates from the same Bahamian condo community where Sam lived. Linda Zhang is the Chief Global Regulatory Officer of the Crypto Council for Innovation, and she said that the U.S. must create clear regulations for cryptocurrency or it will fall behind other countries in terms of innovation and market leadership. Zhang stated that regulations are necessary for widespread adoption of cryptocurrency and that the US is currently behind in this area. We're going to come back to that. Now, Zhang, a law professor and former regulator for the US Securities Exchange Commission, believes that the US needs to establish its own regulations for crypto to be a leader in innovation. She also mentioned that other countries are moving faster to create legislation for crypto assets. And we've spoken before on this show. The EU is currently working on their legislation called the Markets in Crypto Assets, which would provide more regulations for their 27 member countries, but a vote on this legislation has been delayed until April. Now, Zhang said that other countries, such as the UK, Australia, and Hong Kong, are creating regulations for crypto. However, she also mentioned that there are some conflicting signals on crypto regulations in different parts of the world. For example, Hong Kong is considering opening its market to crypto, while Singapore would prefer to close it. Zhang also mentioned that the first country to establish regulations will have a big influence on the rest of the world. Zhang believes that regulatory clarity for crypto is beneficial for the industry and could give crypto startups access to banking infrastructure. This would make it easier for startups to explain their product to regulators. However, she also said that it's not too late for the U.S. to establish regulations and emphasized that if the U.S. wants to be a leading digital economy, regulations are necessary not only for crypto, but for also private data. Philip Hammond is a former UK Chancellor of the Exchequer. Now, he believes that the United Kingdom has fallen behind other countries in becoming a hub for cryptocurrencies. Are you noticing the continuing theme? It seems like every country claims to be behind every other country. What's going on is that these countries are just now starting to recognize that crypto is going to be a thing and that they better get in on this thing. Hammond said in an interview that the country needs to improve its regulations for digital assets. He has also been appointed as the new chair of a company that handles the storage of crypto. Last year, the then Chancellor of the Exchequer, Rishi Sunak, had plans to turn the country into a hub for crypto. These plans included using stablecoins in the country's payment systems. However, the policy document on how to govern cryptocurrencies is late. Financial Services Minister Andrew Griffith recently said that it would be ready in a, quote, matter of certainly weeks, not months. Now, Hammond believes that the UK needs to lead in this area, and that they shouldn't fall behind other countries like Switzerland and the EU. He thinks that the country should take some risks to catch up. Now, the US thinks that they should take the lead on regulating crypto. The UK thinks they should be running things. Again, this continuing theme showing just how important crypto is becoming. Now, Copper is the company that Hammond now chairs. They withdrew their application to register with the Financial Conduct Authority last year. The company instead decided to operate in Switzerland. Hammond believes the FCA was too slow in approving their registration. Copper hopes to return to the UK in the future. Hammond was the Chancellor of the Exchequer from 2016 to 2019. He joined Copper as an advisor in 2021. Hammond told the Financial Times that the company is close to completing another funding round. This round would value Copper at $2 billion. The company last raised $196 million in October of last year. Copper's valuation at the time was not made public. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.